How are you doing today? How are you doing today? If you can hear me, please drop a comment. You're welcome to today's live stream. If you can hear me loud and clear, drop a comment. Confirm you can hear me loud and clear. Also confirm you can see my screen. You're welcome to today's live stream. You're welcome. You're welcome. How's been trading this week? I hope it's profitable. Drop comments if you can hear me loud and clear. If you have any question, you have any pair you want me to analyze, let me know in the comment section. You're welcome. You're welcome. You're welcome. You're welcome. If you have any question, any pair you want me to analyze, let me know in the comment section. Can you hear me? Can you hear me? Another beautiful day. Let's make some money. Let's make some money. Let's make some money. Can you see money on the chart? Can you see nice setups on the chart? Can you see? All right, all right, all right, all right. Good, good. Good morning, Clement. Good morning. You're welcome. Okay, let's get started. Others will join. So we'll start by looking at the fundamentals for today. We're expecting a major news from the United States by 1:30. Let's confirm that. Okay. Australian dollar released its employment change at the early hours of today, 2:30 a.m., which is negative. Employment change is negative for Australian dollar. So Australian dollar is weak at the moment. Australian dollar is weak. You can see the difference. The previous was 26.5. The forecast was 21.2K. And the actual is negative 5.4K. The difference is much. The difference is much. So at the moment, Australian dollar should be weak. Australian dollar should be weak, and unemployment rate remains the same. Forecast is 4.2, the previous is 4.2, and the actual is 4.2. So Australian dollar should be negative at the moment. Australian dollar should be negative at the moment. Then by 12 p.m., Great Britain will be releasing its official bank rates vote by 12 p.m. Nigerian time. We also have the official bank rate also will be released by 12 p.m. Nigerian time. So we should expect high volatility on Great Britain pounds, pair by 12 p.m. Expect high volatility. Okay. Then by 1:30, unemployment claims will be released from the United States. Forecast is 241. The previous is 263. So they're expecting an increase. That's an increase. Okay. So if you are considering trading USD pairs, you might wait for this to be released. Okay, you might wait for this to be released before you trade USD pairs. But currently, I'm on a trade on Euro USD and GBP USD. I'm buying GBP USD. I'm also buying Euro USD, and I hope the market will hit my target before this news is released. So all I need to do is manage the trade before this news is released. And if the news favors me, if the news comes out positive or negative for the dollar, that would favor my trade. If it comes out negative for the dollar, that will favor my trade. Okay. So what I did this morning, I knew a major news would be released by 1:30, so I didn't go all in. I didn't risk all my daily drawdown. I didn't risk everything. I just risked 20 to 30%, and that's what I've always advised. That if you're expecting a major news, don't risk everything on a trade. Don't risk everything on a trade. You should reserve some funds or some margin for news to trade with after the news is released. Okay, don't risk everything before a major news. It doesn't make sense. Mr. Isaiah, good morning. If there's any pair you want me to analyze, if you have any question, just drop it in the comment section. Okay, so let's go to the chart. So start by looking at dollar index right now is bearish. Okay, dollar index right now is bearish. Let's start with the daily time frame. Yesterday candle closed strongly bullish. The dollar is set for buy. Okay, the dollar is set for buy. Dollar is set for buy. You can see how yesterday candle closed. It closed as an hammer. So dollar is set for buy. It has swept this sell side liquidity. It has swept this sell side liquidity. So dollar is set for buy. The sells that we're seeing on the chart right now is a retracement. The sell we are seeing right now is a retracement. Okay, retracement to where? Probably an imbalance that it created yesterday. Okay, so it's likely, you can see we had this resistance before FOMC. We had this resistance, and after FOMC news, after FOMC meeting, there was a breakout from that resistance. So dollar is likely, this is the zone you should be considering. Okay, this demand zone, you can see this demand zone should be where you should be considering buying dollar. Okay, dollar is bullish at the moment. You should look for buys. Dollar long term is bullish. Okay, dollar long term is bullish. Okay, so let's go down to lower time frame. Let's see if there's a fair value gap on a lower time frame. That okay, so you can see this is a demand zone. You can see price ranged at this point. Price ranged at this point, and there was a breakout from that range. So this is our demand zone. So we expect price to retrace back to this zone. This would be a very good area to consider buying dollar. Dollar is bullish right now. Sorry, at the moment it's bearish, but long term should expect. So if the news comes out positive, the dollar should look for buys. Okay, so I might close my trade before the news. Once the news comes out positive for the dollar, if the news comes out positive for the dollar, I'm going to change my bias from bearish to bullish. I'm going to change my bias. So all I need to look out for is my bullish pattern. My bullish reversal pattern should form at this zone. Or let's go down to lower time frame. Do we still have fair value gaps? Okay. So these are the zones I would be considering. You can see this fair value gap here also. It might want to come and fill this fair value gap. Okay. So if I see my bullish pattern at this zone, I would buy. If it breaks out from this zone, if price breaks out from this zone, it means it's coming to fill this fair value gap. Then I'm going to take more buys on dollar, meaning I will be looking for sells on GBP USD, Euro USD, sells. For pairs that have dollar as the counter, it will be sell. I hope that is clear. So that's my take on the dollar. Dollar is bullish long term, but short term it is bearish. It is bearish short term. It's likely going to come and fill this fair value gap and also this gap we have here. Okay, but long term it is bullish. Long term it is bullish. Okay. If there's any pair you want me to analyze, let me know. If you have any question, drop it in the comment section. Good morning, Mr. Femi. Good morning. Thanks for joining. If you have any question, any pair you want me to analyze, let me know in the comment section. Okay, so let's look at yen baskets. Yen basket. To know the strength of the yen. Let's see. I think yen has been bearish. Yen has been bearish. I made some good profit on GBP JPY. I made close to 70 pips on GBP JPY. I executed the trade yesterday and I closed it this morning. Because this morning I closed my trade on GBP JPY. I bought it yesterday. Okay, so let's start with the daily time frame to know the trend for the day. So you can see yen has been bearish. Okay, yesterday it was bearish. Yesterday candle closed as a shooting star. It closed as a shooting star after testing this resistance area. It closed bearish, and I think it's likely there's a fair value gap that was created after the formation of this candle. Let's just confirm that could be the reason for this pullback. Let's just confirm on a lower time frame. It's likely a fair value gap was created after the formation. So you can see the reason for the pullback. Okay, you can see the fair value gap it created at this point. You can see this fair value gap. Can you see? Can you see? That's the reason for the pullback. And I shared this in the morning session yesterday. I told you guys it's likely going to pull back to fill this fair value gap it created here before going bearish. I shared it in the morning session, the session we had yesterday, that if you want to sell yen, You could patiently wait for price to pull back to this zone before you sell, and that's played out. You can see price pulled back, filled that fair value gap, and there was a retracement. So right now it is still bullish, it's still bearish. Yen also is still bearish, but it might retrace back. You can see it has created a fair value gap here. So this would be a very good area to look for your sell pattern. This would be a very good area to look for your sell pattern. So I'm still bearish on yen. I am still bearish on yen, though I've exited my trade. I've exited my trade on yen. If it pulls back to this zone and I see a good opportunity to sell it from this zone, I would sell yen. I would sell yen, meaning I'll be looking for buys on JPY pairs. I'll be looking for buys on JPY pairs. I hope that is clear. So I am still bearish on yen. Let me go to the weekly. Several weeks ago, I identified the fair value gap, I think, yeah, on yen. You can see this fair value gap. I told you guys several weeks ago that yen is likely going to come and fill this fair value gap. So this might be destination. This fair value gap might be its destination. It's not just going to drop down. There's going to be retracement opportunity to buy yen also before it gets to this zone. Okay, it's on a journey. At some point, it will reverse, and continue with its bearish move. That is why you need to learn structure, market structure, know how to identify structure. Okay, it's very important. So that's my take on the yen basket. Good morning, Joseph. Okay. Gold. Okay, don't worry, we'll look at gold. If you have any pair you want me to analyze, let me know in the comment section. So I am bearish on yen. I am bullish on the dollar. Though I am selling dollar right now. I'm selling dollar right now. Well, my long-term bias is bullish for the dollar. I just want to take like 50 pips or 60 pips on GBP USD, Euro USD before going bullish on the dollar. Okay, so let's see GBP USD and Euro USD before we look at other pairs. GBP USD. GBP USD. So GBP USD, what we had here, I told you guys GBP USD has a fair value gap it wants to fill before going bearish. I shared this with you guys, I think on Monday or Tuesday. If you go down to the daily, there was a fair value gap it created here. And after the news yesterday, you can see after the FOMC meeting, the first thing they did was to go and fill that fair value gap. You can see it here. First thing they did was to fill that fair value gap. And after filling that fair value gap, you can see the pattern we had on the daily time frame. It's a shooting star, which indicates change in trend from bullish to bearish. It indicates change in trend from bullish to bearish. Now, after the formation of this shooting star yesterday, I'm sure it created a fair value gap on a lower time frame, and that is the reason for the pullback you're seeing in the market right now. That's the reason for the pullback. It wants to go and fill the fair value gap it created on a lower time. So let's go down to 4 hour. So what can you see on 4 hour? You can see that on 4 hour, it came to fill this fair value gap. You can see what played out on 4 hour. It came to fill this fair value gap. And after filling that fair value gap, look at the pattern it gave. It gave us an engulfing candle. You can see it gave us an engulfing candle. Okay, so let's go down to lower time frame. Let's see 1 hour. So I would love to see, okay, I would love to see it come. You can see this support that was created before the news release. You can see, so this is my supply zone. This is my supply zone. Okay, so to see it pull back to this zone, this will be the first area I'll be looking for my sell pattern. This is where I'll be looking for my sell pattern. Okay, then if we go down to lower time frame, let's say 15 minutes, I'm sure there's still a fair value gap above that. Okay, so we still have a fair value gap here also. You can see this fair value gap from this low to this high. So we have this fair value gap. So GBP might fill this gap and also fill this gap before selling. Okay, so look for sells on GBP today. probably maybe after unemployment claim. After the news is released, you should look for yourself set up on GBP. And if you are selling GBP USD, this is the most recent low. This will be your first target. If you are selling from this zone, this should be your target. I hope that is clear. And if you are selling from this zone, your stop loss should be at this level. Your stop loss should be at this level. Okay. If price breaks out from this zone, it means it's going to fill this fair value gap. Then you look for your sell pattern from that zone. I hope that is clear. That is clear. I hope that is clear. Okay, let's move on to the next Euro USD. Euro USD. So Mr. Femi is asking, what is a fair value gap? What is a fair value gap? When you have a gap between three candles, when you have a gap between three candles, it is called the gap in between three candles is called a fair value gap. The gap in between three candles is called a fair value gap. Like we have it here. We have this candle. This is the first candle, the second candle, the third candle. So the gap in between the high of this candle from 1, 2, 3. The gap in between the high of this candle is the first candle and low of the third candle is a fair value gap. Okay, it's a fair value gap. Like we have this here, we have 1, 2, 3. The gap in between the low of this candle and the high of this candle is a fair value gap. We'd also start counting from this point. 1, 2, 3. The gap in between the low of this candle, the first candle, and the third candle is a fair value gap. I hope that is clear. Okay, so GBP, Euro USD, my bias is still bullish. Okay, I'd love to see GBP USD come fill this, test this supply zone. I would love to see GBP USD come test this supply zone. Okay, it has not tested it. They know a lot of retail traders now would have jumped in. Many retail traders will be selling right now. So this is a trap for retail traders. Price is going to come and fill this, come test this supply area before it sells, and it could also retrace back to fill this fair value gap. You can see the gap in between the low of this candle and the high of this candle is the fair value gap. So these are the areas you should be considering selling GBP, Euro USD. This is where you should be considering selling Euro USD. At the moment, Euro USD is still bullish. When I see my bearish pattern, that is when I'm going to sell. I need to see a bearish pattern on 1 hour or 4-hour time frame. That is when I would consider selling. If I don't see my pattern, if I don't see my bearish pattern on 4-hour, 1-hour time frame, I'm not selling Euro USD. Okay, I'm not selling Euro USD. Euro boy, good morning. GJ has been buying since yesterday. So don't worry, we'll look at GJ in a few minutes. We'll look at GJ in a few minutes. So let me start with Australian JPY. That's from Mr. Isaiah. Australian dollar JPY. Australian dollar JPY is still bullish. Okay. Let's start with the daily time frame. So it is still bullish. So you can see yesterday candle closed as an hammer after filling a fair value gap. Can you see that? You can see that after filling a fair value gap. If you understand fair value gap, you can just, that could just be your strategy. Identifying fair value gap. When price fills a fair value gap, wait for a bullish reversal pattern to form or a bearish reversal pattern to form, then you take your trade. Just using fair value gaps. You can build your strategy around just fair value gaps and candlestick pattern. Okay, so you can see on a daily time frame, price pulled back to fill the fair value gap, and after filling the fair value gap yesterday, what pattern formed? Hammer. And after the hammer candle formed yesterday, I'm sure a fair value gap was created. That is the reason for the sell we saw this morning on Australian dollar JPY. If you go down to 4 hour, let's see. So on 4 hour, let's see. We have Marubu. You can just go down to 1 hour 15 minutes. There is a fair value gap it came to fill. Okay, so you can see the fair value gap it came to fill. This is the reason, this fair value gap. This fair value gap was the reason for the retracement. So this is where you should have bought Australian dollar JPY. You can see we had what looks like an hammer. After price filled the fair value gap, an hammer candle formed. This is where you should have bought. If you had missed, no, this is a bearish hammer, you would have waited for this candle to form before you buy. If you buy, you want the price to pull back to face fair value gap. This is where you should be considering buying JPY. Australian dollar JPY is still bullish. It is still bullish, but you should wait for price to pull back to this zone before you buy. That is my take on Australian dollar. And if you insist on buying from the current market price, you should only risk, say, 20 or 30% of your maximum daily drawdown. Okay, while you're waiting for price to pull back to your point of interest, you could risk 20 to 30% of your maximum daily drawdown. And if price pulls back to your point of interest, you can risk the remaining 70% on this trade. What do I mean? Let's say your maximum daily drawdown is $50. 20% or 30% of $50 will be around $15. So if you risk $15 taking this trade from this point, then if price retraces back to your point of interest, you risk the remaining $35 because price retracing to your area of interest is a probability. Nothing is guaranteed in this market. So instead of missing the move, price can just keep going up from this point. I just continue with this bullish move from this point. So if you don't want to miss it, I always advise that at least be in the market, but you shouldn't risk everything on that trade. I hope that is clear. So that's my take on Australian dollar JPY. It is bullish, but wait for price to pull back before you buy. And if you are buying from the current market price, your stop loss should be the low of this candle. This is where you set your stop loss, which is about 30 something pips from the current market price, which is not too high. So if your bias is bullish, you could take partial entry on Australian dollar JPY. Okay, Clements requested for gold. Gold is bullish. I checked it this morning. Gold is bullish. Gold is bullish. So gold is likely, you can see what it has done this morning. It has come to sweep the liquidity residing at this high. Let me start with the daily time frame. Gold is bullish, but this is not the right time to buy gold. You should have bought gold at the early hours of today. Buying gold right now is at a very high risk. Buying gold right now is at a very high risk. So what did gold do? Gold came, I think it came to test this resistance on support. You can see that. It came to test this resistance on support, and there was a strong rejection from that zone. There was a strong rejection from that zone on the daily time frame. There was a strong rejection. So let's go down to 4 hour. So on 4 hour, you can see what gold did. It came to fill. There's a fair value gap here. Can you see? Can you see how the market is respecting the fair value gap? Strong rejection. And the fair value gap is in confluence with this resistance on support. Resistance on support. And also, if you apply your Fibonacci, this is the most recent swing low. If you apply your Fibonacci from this swing low to swing high, you can see price pulled back to here. Can you see that? Price pulled back to a discount area. You can see that. You can see that price pulled back. So this is a strong buy on gold, but this is not the right time to buy. I'm not advising you to buy gold now, though it is still bullish. Buying it from the current market price is at a very high risk. I do not advise that you buy gold. Gold will still sell. This buy is retracement to, I think it wants to fill the fair value gap. it created. I think, yeah, this fair value gap, this supply area. If you want to sell gold, you should wait. If you have missed this buy, two things are going to play out. Gold might just keep going up, fill this gap and sell, or it will retrace back to, if you go down to 15 minutes. So if you want to buy, you have missed this move. Okay, you have, this is where you should have bought. You can see we had an hammer, we had a spinning bottom, we had a doji. So this would have been the best time and price to buy after the formation of this engulfing candle, this candle that engulfed all this candle. This is where you should have bought. So if you didn't buy at this point, you cannot buy from the current market price. You cannot buy, it doesn't make sense. So if you want to buy, if you insist that you want to buy, you should wait for price to pull back to fill this fair value gap. Okay, these are the areas you should be considering buying. You should buy at a discount and not a premium area. You should buy at a discount and not a premium area. As you can see, it has swept external range liquidity that was residing at this previous high. It has swept that liquidity that was residing at this high. It has swept it. So it's likely going to come fill the, it's likely going to go for the internal range liquidity, which are the fair value gaps. So these are the areas you should be considering buying. You cannot buy from this point because this is where it's heading to. If you are buying from this point, you want to set your stop loss here and you are aiming for this. You can see that the risk reward is very poor. You can see that the risk reward is very poor. So don't buy from the current market price. Don't buy. It doesn't make sense. You have missed this move. Accept that you have missed this move. Wait for retracement or wait for price to pull back to this zone for you to sell gold. I hope that is clear. So that's my take on gold. So that paid you want me to analyze? Okay, GJ, that's from Joro Boy. GJ, GBP, JPY. GBP, JPY, I think if I want to take any risk on GBP, JPY now, it will be a sell. Remember yesterday, was there Isaiah? I shared with you guys that GJ wants to go fill a gap. Yeah, I said it yesterday that GJ, there was a gap around this area. So GJ right now has swept liquidity, external range liquidity. So it is expected to pull back. Let's go down to 4 hour. I think it was on 4 hour. Yes, yesterday. Yeah. Yesterday I told you guys it's going to come for to fill a fair value gap. It was going to come fill. Let's go to 1 hour. Said it yesterday. Yeah, I said it yesterday that GJ would come fill this fair value gap. Yeah, I shared this yesterday. Yeah, it's going to come and fill this fair value gap. So you can see it has filled that gap. It even broke out from that gap. And the reason it broke out from that gap is the external range liquidity that was residing at this relative equal highs. That's the reason it broke out from this fair value gap. That's the reason it didn't respect the fair value gap. You can see that when price got into that zone, you can see that it ranged a little. There was a little range, and this is to entice many retail traders to sell from this fair value gap. Many retail traders would have sold, and their stop losses would have been residing at the high of these candles. You can see we had a spinning top. You can see we had a spinning top. So most retail traders who have executed sell, and their stop losses will be residing at this previous high. And those who executed sell from this point, their stop losses will also be residing at this high. So GJ has already swept that liquidity. So I am looking for sells on GJ. I'm going to take a sell on GJ. Okay, but what am I looking out for before taking the sell? Let me go down to 15 minutes. Let's see. 15 minutes. Okay, let me see 5 minutes. You can see on 15 minutes, we have a bearish reversal pattern on 15 minutes time frame. That's the sell setup. Let's go to 5 minutes. Okay, 5 minutes also. Then let me go to 1 minute. There should be a shift in market structure on 1 minute. Okay, there should be a shift in market structure on 1 minute. So I would love to see, okay, it has created, we have this fair value gap here. We have, there's a fair value gap here that has not filled. You can see this fair value gap. So that would be a very good area to join the sell. Okay, that would be a very good area to join the sell. And there's nothing bad in taking the trade from the current market price. There's nothing bad because the difference from this point, 20096 to 201, that's about just about how many pips? for 11 pips. 11 pips. And if I'm taking the trade, my stop loss will be at this point. Yeah. So let me calculate the risk. This is 94.27. I'm taking this trade now on GJ. If you are convinced, you can also join me in taking the trade. I'm looking for sells. I'm going to take a sell on. So that's about 2094. That's about 30 pips. I'm just going to set it a few pips above this high. Few pips above that high. Here's my. Okay, so that's my take on GJ. 40 pips, 40 pips, 40 pips. Okay. Few minutes, please. Okay, so that's my take on GJ. Trade executed. Okay, so let's move on. Let's move on. I hope that is clear, Joro boy. I hope that is clear, Joro boy. Please give the video a thumbs up if you haven't done that. Give it a thumbs up, and if it's your first time joining the live stream, do subscribe to the channel so that anytime I come on live, you get notified by YouTube. Do subscribe and do give the video a thumbs up so that others can get to see this video. Okay. I believe you all can hear me. You can hear me. Yes. Can there be a buy or sell signal, buy and sell signal in a ranging market pattern? Yes. When the market is in a range, you look for buy and sell. It all depends on your strategy. Okay. It all depends on your strategy, Mr. Femi. When the market is in a range, you could see opportunity to buy. You could also see opportunity to sell. It all depends on your strategy. It all depends on your strategy. Is there another pair you want me to analyze? Let me know in the comment section. Any question? Is there any other pair you want me to analyze? Let's just look at USD card. USD card should be selling. USD card should be selling. Let's start with the daily time frame. USD card should sell, and the sell is short term. Okay, the sell is short term. USD card is likely going to come and fill this gap. This gap, USD card is likely going to come and fill it. So what the sell is short term sell, and if you have not entered the sell, you shouldn't sell now. If you have not entered sell, you should not sell now. Wait for retracement. This is just retracement, probably to this. It's likely just coming to test this area. This is where you should be looking for your buys. Okay, this is where you should look for buys. It's likely coming to fill this gap before going bullish. Okay, look for your buys from this one. Any question? Any question? Any question? Impulse means the aggressive move in the market. That's what an impulse move means. It's an aggressive move in the market. That's the way to, I think, best way to define it. Aggressive move in the market, like what we have here. This move is an impulse move. This is aggressive sell. Okay, these are impulse move. All these are impulse moves. Okay, these are impulse move. You can see aggressive sells or aggressive buys. This is an example of an impulse move. You can see this. You can see this is an impulse move. This aggressive sell is an impulse move. This one also is an impulse move. This also is an impulse move. Any question, any question, any question? If you have any question, let me know, let me know. Any question? Is there any other pair you want me to analyze? Let me know. Please ensure you apply proper risk and money management on any trade you execute. Apply proper risk and money management. Always know how much you're going to lose if the trade goes against you. You should think risk first before reward. Risk should come first before reward. Risk should come first before reward. Most traders lose money because their focus is on the reward and not the risk. That is why most traders lose their money. That is why most traders blow their account. You should be more concerned about the risk and not the reward. Risk should be primary, reward should be secondary. Don't execute the trade if you don't know the risk. If you don't know how much you're going to lose on that trade, don't execute the trade. Most times when I execute my trade, I don't set take profits. I don't set take profits. I leave my take profits open because I know when the market will reverse. If I'm buying, I want to see a bearish reversal pattern form before I would sell. If I'm buying, or probably the market has hit my TP, I go for 1 to 2. But sometimes the market might not get to 1 to 2. So once I see that a bearish reversal pattern forms, I know there will be a reversal. I would close that trade. I would close the trade. I don't set TP. I leave my TP open, but I always set my stop loss. I always set my stop loss. And if you want to make money consistently in this market, you must use stop loss. You must use stop loss. Any questions? Okay, it appears there are no more questions. I appreciate every one of you for your participation. Mr. Clement, Mr. Isaiah, Mr. Femi, Mr. Joseph, Joro Boy. I appreciate you all for your participation, and I wish you all a profitable trading day. For those of you in the private community, the conversation continues in the community. If you have any pair you plan to trade and you're not so sure, drop it in the community. Let us look at it together, and we'll give our opinion on that instrument. Okay. And if I see any good opportunity, I would also notify you guys. As I've always done, I'll notify you guys. Bye for now.